ค่ะเราเดินทางถึงช่วงสุดท้ายของการสัมมนาในวันนี้กันแล้วนะคะในช่วงนี้ค่ะเราจะมารับฟังว่าในมุมมองของนักลงทุนระดับโลกนะคะมีมุมมองต่อ transition finance product อย่างไรค่ะรวมถึงมีความคาดหวังเกี่ยวกับความโปร่งใสและการเปิดเผยข้อมูลอย่างไรนะคะในช่วงนี้ค่ะท่านแรกก่อนนะคะมีวิทยากร2ท่านเนาะท่านแรกนะคะขออนุญาตเป็นเรียนเชิญมิสเอลดีแวนเดอร์วูสตินนะคะ Corporate Social Responsibility ค่ะSpecialist นะคะจาก Luxembourg Stock Exchange ค่ะขอเสียงปรบมือต้อนรับค่ะ
Thank you. Good afternoon, everyone. I'm Elodie van Woestyne. I'm a CSR specialist at the Luxembourg Stock Exchange. So today I'm pleased to share with you and to discuss how and why the attention is turning to transition finance today, with a discussion about transition bond, also the new guidelines from the International Capital Market Association, and a few examples and case studies. We'll also have a discussion from my colleague on post-issuance reporting and impact. And what I want to share with you is a perspective on from a stock exchange and especially on the fixed income instrument market. So let's start with why we are turning the attention to sustainable finance today. I think you all know that climate change is one of the most pressing challenges that we are facing today. 2024 was already the hottest year ever measured, where we reached 1.55 degrees higher than pre-industrial times. And according to the World Meteorological Agency, we will reach the average 1.5 degree in the next 5 years. So that's why to address this urgent challenge, we need to halve emission by 2030 and to reach net zero by 2050. And there's a need in terms of investments. And we've seen from many governments, companies reaching and disclosing net zero pledges. But there's a huge need in terms of investment of about $12 trillion by 2035, which is far from the current nearly $2 trillion as of 2023. So that's why transition finance is really an unprecedented capital reallocation challenge across all geography, but also across all sectors and mainly among hard-to-abate sectors. And so transition finance today has a much more broader scope than green finance. When we look at this picture from the European Commission, we see that initially we were talking about green finance, but green finance mostly financing activities that are already considered as environmentally sustainable or green, and is leaving aside a much bigger portion of the market, especially hard-to-abate sectors and some emerging markets. And that's why the objective today is to talk about transition finance, and that progressively through the 3 steps, it will turn into green finance, and in a few years we will only talk about green finance. And in the last year, and I think you mentioned it already today, there have been a lot of regulations worldwide around transition finance. In Europe, CSRD, for example, or IFRS in other parts of the world. We've also seen a lot of alliances, such as the Glasgow Financial Alliance for Net Zero, or the SBTI, the Science-Based Targets, that has now many signatories. So there have been an evolution in the landscape of transition finance. And now it's reached to a state where we have a kind of 2 types of definitions. One definition more from an economy-wide perspective, from the OECD, for example, or GFENS, where we talk about the process of becoming sustainable for all types of sectors. OECD mentioned that it's financed, raised, or deployed by corporates to implement their net zero strategy. But also on the other side, we have definitions that are more targeted to high emitting sectors from the UN, from ADB, where they talk about challenges remain how to increase finance to support emission reduction of hard-to-abate sectors that emit substantial greenhouse gas emissions. So we see here that there's not one unique definition, some more economy-wide, some others more targeted to high emitting sectors. And to support this definition of transition finance, there have been the emergence of taxonomies worldwide. Different types of taxonomies exist around the world. You have green taxonomies, you have sustainable taxonomies, which include a part of green, but also some social factors, and transition taxonomies, focusing more on hard-to-abate sectors with specific sunset clauses. But all these three types of taxonomy are not mutually exclusive. They often overlap. And they all have the same definition that we see here. It's a list of projects that exhibit a set of green or social patterns. It's also a classification tool for different investment style. But it's not, and we discussed it in the session just before, it's not a rating. It's not a mandatory list of potential investments. And very important also, it's not judgmental at all because it's based in the latest scientific findings, industry knowledge. And also very important, it's dynamic. So it will evolve based on the technological knowledge and evolution, so not inflexible. And now I just wanted to show you this map that reveals the emergence of many, many taxonomies worldwide. So there's not one taxonomies, but many that have some common ground. So we discussed the green, sustainable, or transition taxonomies. I think we had one of the first one was the European taxonomy, which was more of a green taxonomy defining environmentally sustainable activities with 6 environmental objectives, among which climate adaptation and climate mitigation, with activities that must promote those objectives, but also meet some technical screening criteria. And if we look now more on your part of the world, in Asia, we have now the Asian taxonomy, which is also a definition of environmentally sustainable activities, supporting the green transition, but focusing on specific sectors such as the energy, the transport, and is more based on a traffic light system where you have these green activities that already meet the 1.5 degree objective, some amber activities that are moving towards the 1.5 and the Paris Agreement, and also the red activities that are for now harmful to the society and to the environment. Okay. So now that we've seen why we talk about transition finance today, what it is, I wanted to deep dive on specifically transition bonds, especially from the perspective of a stock exchange. We know that sustainable bonds have been for some time now instrument used for to finance the transition, and it started way back in 2007 when we had the first green bond from the World Bank and then from the European Investment Bank, and it evolved progressively with the green bond principle in 2014 from the ICMA. Which laid the ground for the other type of sustainable bonds, social bonds, sustainability bonds, and sustainability-linked bond. But as we see here, green bond and sustainability bond are not used that much by hard-to-abate sectors to finance the transition, only 2% of green and sustainability bonds. And when we look at SLB, it's where also it's very striking because SLB, sustainability-linked bonds, were made to help the transition, as they are not use of proceeds bond and they are tied to a specific target, and most of the targets today are linked to GHG emission reduction. But we see that only 20% of issuers are from those hard-to-abate sector. So the market has recognized the limits of those type of instruments to really finance the transition. And so recently there's been new evolution in terms of financing through fixed income instruments. So of course you still have the traditional sustainable bonds, also the sustainable loans. But in parallel, we've seen the emergence of this transition bond concept. First with the ICMA Climate Transition Handbook, which was issued in 2020 already, but revamped in 2023 and 2025. It's a guidance to help issuers of green bond or sustainability bond, for example, to make a meaningful contribution to GHG emission reduction. And it helps them to tie the issuance to the issuer strategy so that the climate transition plan of the issuer is linked to the issuance, that it has targets that are science-based, but also based on sectoral pathways. And then very recently, in end of 2025, we had the climate transition bond guidelines issued by the ICMA. It's issued as a separate label, either as a use of proceeds bond or as a sustainability-linked bond. So deep diving now on this new climate transition bond label. First, it's really a standalone standalone label. There was a lot of debates on the market whether it should be a subcategory of green bond, but it has been in the end selected as a standalone label, either as use of proceeds bond, where it's mirroring the green bond principle with the four categories with the use of proceeds that have to be linked to climate transition projects, with the process for project evaluation that must be specific to the project detailed in this transition bond, the management of proceeds, and the reporting, knowing that here, similarly to the other sustainable bond, the external review is encouraged and recommended. But it can also be a sustainability-linked bond where it's focused on targets linked to GHG emission reduction. When we talk now specifically on the use of proceeds bond, we know that it's very difficult to draw the line between climate transition project and green bond projects. So ICMA recommend that it's up to the issuer to define the list of projects. So of course they provide some example, but it's not exhaustive, and they aim to make this list evolve as technology evolves as well. So for now, they define climate transition projects as assets, investment and activities, early phase out and decommissioning, and other expenditures such as R&D related to high emission activities that lead to a substantial and quantifiable GHG emission avoidance, reduction or removal. And that's where they've listed this type of projects. So of course, carbon capture, utilization and storage, early retirement and decommissionation of high emission assets, fossil fuel switch, low carbon fuels, and methane and flaring abatement in oil and gas infrastructure. What's important as well is that these climate transition projects, there must be a significant proportion allocated to climate transition projects, and the other remaining part should be allocated to green projects. So it's very important that the remaining is green projects. Now, another aspect that is new under the climate transition bond guidelines is the safeguards that are added for the issuance. It's safeguards to ensure the transparency and the integrity of the market, to link the issuance to the high-level transition plan or overarching transition plan of the issuer. So you have an issuance that have to support, of course, the transition plan of the issuer, an analysis supporting that low-carbon alternatives are not either technologically or economically unfeasible, that it's aligned with recognized taxonomies. As we've mentioned, there are many around the world with specific decarbonization pathways and roadmaps. Also substantial GHG emission reduction beyond business as usual and best available technique. And lastly, an identification and mitigation of carbon locking risk. And a point that is really specified in the guidelines, it's about fossil fuel activities to ensure that climate transition bond can be issued linked to fossil fuel. There are additional safeguards that are required. Asset level transition plan first, then a commitment to decommission, a limitation of fossil fuel expansion, also implementation of carbon capture, utility and storage, also reporting on forward-looking metrics, and lastly, investment in low carbon activities. So that's very important to be able to include fossil fuel activities in the climate transition bonds. Now I wanted to give you a few examples. So transition bonds are not new in the market. They exist way before the new ICMA guidelines. One of the most famous one are the transition bond from Japan as a sovereign issuer, because they use transition bond to finance their GX 2040 vision. It's their Paris Agreement goal to achieve neutrality by 2050, and they've issued several transition bonds to finance the hard-to-abate sectors. Here it's a transition bond from 2024. Another interesting case, it's Snam. It's an Italian utility company. They've issued as well a transition bond in 2022. It was also to finance their own transition with a focus on projects linked to renewable energy, especially with biomethane plants. And they've, at the time, aligned their transition bond to the ICMA Green Bond Principle, but also to the Climate Transition Finance Handbook that I was mentioning before. So it was a precursor in the transition bond story. And the last example to share is QNB. It's a Turkish company, and it's actually one of the first climate transition bond respecting the guidelines from ICMA. For now, it's private placement of fully subscribed by IFC, and it's to finance the transition of the Turkish country and to support their net zero target by 2053. You see here that they focus mostly on hard-to-abate sectors, iron and steel, aluminium, cement, and fertilizers. And in that case, their significant portion, it means 50% allocated to hard-to-abate sectors. So last word before I hand over to my colleague for the part on reporting. I think what we've seen at the stock exchange in the fixed income market, it's now more investors are more and more looking not only at the issuance itself, but they're looking also at the issuer transition credibility. So there's more and more scrutiny on the issuer itself rather than only on the issuance. And that's why we've seen that the climate transition bond guidelines focus more and more on the issuer itself, where you have to link the issuance to the entity-level transition plan of the issuer. The framework also should reference to the overarching climate transition strategy of the issuer. The categories, transition bond categories should be clear and to clearly state the transition projects related. The other two, the post-issuance report and the external review is very similar to what we've seen in the past because transparency is very important and it builds investor trust to have the external review. So really a strong emphasis on the issuer level analysis in parallel of the issuance. So now I'll hand over to my colleague for the next section on post-issuance.
ค่ะขอขอบคุณค่ะ Miss Elodie van der Woestyne นะคะต่อไปค่ะขออนุญาตเรียนเชิญนะคะอีกหนึ่งท่านค่ะกับหัวข้อต่อเนื่องกันเลยนะคะ Post-Issuance นะคะ Reporting ค่ะโดยคุณ Alfonso Benedetti นะคะ Sustainable Finance Advisor ค่ะจาก Luxembourg Stock Exchange ขอเสียงปรบมือต้อนรับค่ะ
Thank you very much for inviting us. We are pleased and it's really glad to sharing with you also the expertise that we've been building in the last years in Luxembourg Stock Exchange. So, as Elodie just said, actually one of the investor expectation regarding all the world of transition is actually a proper post-issuance reporting. This is true, especially because sustainable and transition bonds are still considered not that traditional activities, so investor trust must be somehow gained with more efforts regarding both transparency and external reviews and post-issuance reporting. There are several advantages of providing a proper and timely post-issuance reports to investors. The first one, for the investor side, they are able to actually confront and compare different investments, so they can do benchmarks and compare different investment opportunities. But this is true only if they have reliable and timely data to do so. On a more internal perspective, this also helps the issuer because it helps them to track and to constantly monitor the implementation of the projects, both sustainable and transition projects. On a more external perspective, it's also good to demonstrate alignment to best practices, internationally recognized frameworks. This also helps the issuer to be perceived as trustworthy by the investors. And generally speaking, proper post-issuance reporting helps building communication among all the parts that are involved. So investors, issuers, the project owners themselves. Speaking about the use of proceeds bonds, so all the bonds whose proceeds are specifically allocated to sustainable or transition bonds. So here we are not speaking about sustainability-linked bonds. The main typology, we have two main data that the investors expect, and also regulators and ICMA suggest in their principles, that is the allocation data and the impact data. What we see often is that issuers simply publish one single report with all the information inside, so both allocation and impact data. Some of them prefer to publish two different reports. What is the difference between these two is actually that, as you see on the left, allocation report and allocation data are based on the specific amount of money that have been allocated throughout the life of the projects. It usually contains not only a list of the project, but also a short description so that the investor can understand what you're actually financing. it's quite standardized, as you can imagine, because the main KPI here is the amount of money that you allocated to the specific project. And this is the main requirement, at least from ICMA principles and internationally recognized standards. But it is also important to provide data information regarding impact, meaning that you should not only say, communicate about how much money are you putting in those kind of projects, but also which is the sustainability outcome that derive from this project that you are pursuing. It is recommended, so it is not required by ICMA, but still nowadays it's really considered to be best practice. So if you wish to issue a sustainable transition bond, is highly recommended also to publish impact data. But as you can see here, the KPIs that have to be published within this report are a bit more diversified than the allocation data. And this is because mainly it depends a lot on the projects that you are selecting, because there might be green projects, social projects. So there is less standardization, and usually these data are also accompanied by higher emphasis also on the assumptions and the methodologies that have been used to assess this data. You can see here, let's say, a little schematization of these two typology of data. As you see on the right, the allocation data. So not only the total amounts that have been allocated, but also the amounts that still need to be allocated to the specific projects, together with a brief description. On the right, you see impact data. Here it's interesting to highlight also one specific cell, that is the share of co-financing by others. This is especially true when a specific project is not only financed by one single firm or one single investor, but it's co-financed also by others. This is not, say, it's considered to be a best practice to publish and share only the specific amount of impact that you contributed to, even though it's still quite rare, but it's really, really, really meaningful for investors. And as you see, here it's clearly a project that involves CO2 avoidance, but you may have a lot of different impact KPIs. And this is what also makes this kind of report a little bit more challenging sometimes. On a more practical perspective, here you can see a specific case, that is the JP Morgan Chase allocation and impact reports. And you can see it quite clearly, because on the left you find the project type, the number of projects, and the allocated amount for each of these projects. While on the right you see all data regarding impact. We consider this to be a best practice because, as you can see, you have in the middle the total impacts of the project, but on the right only JP Morgan Chase share of these impacts. This gives, as we said, further transparency on this data. The case that we just saw regarded a more classical and typical sustainable bond, use of proceeds bond. In the case of Japan, that is the same one that Elodie just showed to us some minutes ago, it's important to highlight that investors' expectations do not change that much in terms of timeliness and quality of data, of course, regarding post-issuance reporting. What's interesting here to highlight is not only the allocation data that you see in the table above, but Japan also published in their report specific sections in which they explain also on a qualitative point of view which are the key technologies and projects that they want to invest in within this self-labeled transition bond. Really quick on sustainability-linked bond. They are not interested by allocation or impact reporting because sustainability-linked bonds are not use of proceeds bond, meaning that you are not binded. You do not have to invest the proceeds to specific categories. The main characteristic of SLBs is actually that you are linking the financial characteristic of the instrument. So mainly it's the coupon. So you have a coupon step up or step down, depending on the achievement or non-achievement of specific sustainability targets. So in this case, post-issuance is not focused on allocation and which are the projects that you're financing, but it's more on providing transparency on the level of achievement and performance of the specific KPI and sustainability performance target that you identified. In this case, even though external review is always important, but it's especially important for SLBs because in this case, the confirmation of the achievement of such performance has a financial impact on the investor because it may affect directly the coupon. As we saw for JP Morgan and Japan regarding their as examples of post-issuance reporting, it is interesting also to have a look to post-issuance reporting of an SLB, in this case the Thailand SLB. As you can see, here the focus is not focusing on projects, but focusing on the specific KPI that they consider to be relevant. So they choose two KPIs. The first one, the total greenhouse gas emissions, and the total zero emission vehicles. It's just an example, but you see that the reason is behind it quite simple. So you have, it's important to provide to investors an overview about how is your performance going on the KPIs that you selected and you linked to the sustainability linked bonds. It's important to publish post-issuance reports. Sometimes, and now after years and years of issuances of green, sustainable, and even transition bonds, the market requires a little bit more effort because nowadays it's not enough to just publish a post-issuance reports, but what it is expected by investors is also to have an external review. It, of course, provides investors several advantages because in the first place it gives them more trust in investing in those instruments because the issuer is not then the only one who is displaying his results, but there is also a third party that somehow is certifying or verifying or giving an opinion on the framework or on the post-issuance reporting. There are a lot of, there is a whole universe regarding external reviews. We have three main typology of services, so second-party opinion verification and CBI verification or certification. Here the idea is really just to make you feel that there is quite a movement on the market, especially in the last years. We saw a strong wave of concentration within the sector. The acquisition of Cicero by S&P is just one of the most important acquisition that happened in the last years. But as you can see, the landscape and the universe regarding external reviews is quite diversified, both in terms of typology, but also in terms of geographical dispersion, because there are some providers, as you see in the bottom right, that are specifically focused on some specific regions and some specific markets, such as China. Then, in a nutshell, we won't speak a lot about the specific characteristic of each of these three, but just as an overall picture, we may say that the second-party opinion is usually mostly used for pre-issuance reporting, meaning sustainable finance or transition finance framework. It is usually less quantitative because you don't have data usually to verify. It's simply a verification of the alignment of your framework, so also including the future issuances of green, social, sustainable bonds and transition bonds that are linked at that reference to this framework. The alignment of all these two specific principles. One of the most used one is ICMA, but you also have ASEAN principles regarding green bond and sustainable bonds, generally speaking. It's more qualitative and it's more focused on the entity as a whole, assessing also which is the sustainability strategy, having a view and an opinion also on how the sustainable financing strategy links with your sustainable strategy or transition strategy. For post-issuance reporting, probably the most used one is the last one, so verification assurance. Is not that different from unusual assurance that you may have for usual traditional financial statements. And in this case, the focus is really to verify the data that you are reporting. You have several levels of assurance. It might be a limited assurance, a reasonable assurance, depending on the depth of the analysis that the verifier would do. But generally speaking, it follows specific international standards, such as the ISA 3000, and it's the service, the post-issuance service that we see the most, both for use of proceeds bond, but also for SLBs. In the center, you find the certification. We can show it just for completeness, but it's not that used yet because it's very technical and it's based on mainly on climate bond initiative, climate bond standards published by Climate Bond Initiative. It's very technical. It requires also the analysis of specific technical thresholds to assess that the project in which you are investing are indeed considered to be green or not. But not only, I'd say, green or not, but this is especially linked to climate projects, as the name might suggest, so climate bond initiative. When to do what, this is something that we just said, but this is useful to have a broader view on it. So we have the SPO that is commonly used for the framework, the assurance that is very rare on a post-issuance, that is very rare on a pre-issuance, but it's very common on a post-issuance reporting, both the use of proceed and SLBs. And as we said, there is no mandatory requirement to have an external reviews, but still nowadays it's really considered to be a market best practice. That not having it, it may really hamper the issuance of the green bond, at least from the perspective of the market and the investors. And this, as we said, is also especially true for SLBs. Summing up what we just said, investor expectations are progressing, are changing over time. We are now in a moment in which their expectations, at least regarding post-issuance reporting, have been somehow standardized. First of all, it's to be taken for granted, but it's useful to highlight also this. They really expect regular and timely reporting, both from allocation, but also impact and SLBs. One could take this for granted, but believe me, it's not the case, because we also have some issuers that struggle sometimes in providing timely reports. And this is because investor really needs to monitor the investments. May they be on specific projects, like in the case of user proceeds project. And this is also true not only for sustainable bond, but also for transition bond, because as we saw, we don't have much ICMA labeled post-issuance reports yet, because they are very, very, very recent. We have only some post-issuance reports of self-labeled transition bonds, but market expectations do not vary that much, at least in terms of quality of data and timeliness. Same thing for SLBs, because as we said, in this case, the achievement or non-achievement of specific sustainability targets is really linked to financial consequences for the investor. But last 2 points that are also interesting to speak about. It's first of all the consistency and comparability over time, because you are supposed to publish reports every year until the full allocation of the proceeds in case of use of proceeds bond, or at least up to the achievement or non-achievement of the targets regarding the KPI for SLB. So it might happen that in several years you change the methodology of the assumptions that are below the calculation that you are using to come up with the results. It's not forbidden, but it's really, really helpful to explain it very clearly to the investors. So which are the assumptions, the change in methodology, why did I change methodology, why did I not? And last point, as we just said, post-issuance alone nowadays is not enough. So investors really expect to have someone, a third party, that is somehow certifying or putting a signature, and it's externally reviewing your reports. And this is key, especially to avoid, to combat the risk of greenwashing in sustainable issuances. Thank you.
ค่ะขอเสียงปรบมือให้กับมิสเตอร์อัลฟอนโซ เบเดเดตินะคะจาก Luxembourg Stock Exchange เป็นอย่างสูงค่ะท่านผู้มีเกียรติทุกท่านคะงานสัมมนาในวันนี้ได้สิ้นสุดลงแล้วนะคะขอขอบคุณในความร่วมมือนะคะของท่านวิทยากรและก็ผู้เข้าร่วมทุกท่านเป็นอย่างสูงก่อนจบนะคะเราขออนุญาตแจ้งประชาสัมพันธ์เรียนเชิญทุกท่านสัมมนาต่อเนื่องนะคะโดยงานจะมีงานอีก2วันที่ตลาดหลักทรัพย์แห่งประเทศไทยในวันพรุ่งนี้และวันมะรืนนี้นะคะซึ่งจัดขึ้นโดยสถานเอกอัครราชทูตณกรุงบรัสเซลส์เช่นเดียวกันค่ะโดยงานใน2วันนี้ก็ยังคงอยู่ในกรอบแนวคิดและธีมของ ESG ที่มีความต่อเนื่องแล้วก็เข้มข้นเพิ่มขึ้นจากวันนี้นะคะเพื่อขยายผลลงลึกในแง่ของมาตรฐานสากลรวมถึงขับเคลื่อนธุรกิจอย่างยั่งยืนต่อไปนะคะขออนุญาตเรียนเชิญท่านผู้บริหารและผู้ที่สนใจทุกท่านนะคะไปร่วมอัปเดตเทรนด์สำคัญนี้ร่วมกันนะคะสำหรับท่านที่สนใจก็สามารถติดต่อสอบถามรายละเอียดเพิ่มเติมจากเจ้าหน้าที่ด้านหน้าได้เช่นเดียวกันนะคะก่อนที่จะแยกย้ายกันไปในวันนี้ค่ะขออนุญาตฝาก2เรื่องถึงทุกท่านนะคะรบกวนช่วยทำแบบประเมินความพึงพอใจในการสัมมนาในวันนี้นะคะให้กับเราสักครู่หนึ่งนะคะแล้วก็เรื่องที่2สำหรับท่านที่มีการยืมเครื่องแปลภาษามานะคะรบกวนนำส่งคืนที่โต๊ะลงทะเบียนแล้วก็อย่าลืมแลกบัตรประชาชนคืนด้วยนะคะสุดท้ายแต่ไม่ท้ายสุดนะคะอย่าลืมสแกนบัตรจอดรถก่อนกลับด้วยนะคะและขอให้ทุกท่านเดินทางโดยสวัสดิภาพขอบพระคุณทุกท่านที่อยู่ด้วยกันตลอดทั้งวันนี้อีก1ครั้งขอเสียงปรบมือให้กับทุกท่านและขอบพระคุณสวัสดีค่ะ